Welcome to the Whole Bowl Co podcast with myself, Daisy, and Ellie. We are longtime friends and business partners. This is your go-to source for women's health, experiences, and humour during trying to conceive, pregnancy, and postpartum. Join myself, a qualified nutritionist and mother of one, and Ellie, a mum of two boys, as we share our personal motherhood journeys and insights. Tune in for expert interviews on topics that matter to you, including many candid conversations about motherhood. Subscribe to our podcast and follow us on Instagram for updates. Let's navigate this beautiful journey together. The Whole Bowl Co acknowledges the traditional custodians of country throughout Australia and the connections to land, sea, and community. We pay our respect to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today.
On this week's podcast, we have Ben Schafer from Track Financial. Schafer is whole bowl mortgage broker, a dear friend of both Daisy and mine. He went to school with our partners, and he was our expert of the week this week over at Whole Bowl. So if you go to the website, you can find his article that he wrote for us on financially preparing for parenthood. It's a really informative article, and at the end of the article, he's included a heap of links to budgeting templates, borrowing calculators, really helpful stuff. It's really nice to mix it up a bit this week with a different expert. It's really important to me that women through this stage of their life, financially educated and involved in the financial decision making of their household. So we really hope that you guys get a lot out of this podcast episode and the article. Please send through any questions that you have for Schafer, and he'll respond to them for us this weekend. And just a disclaimer that this is all general advice provided. Welcome, Schafer, to the podcast.
Thank you. Thanks for having me. Really excited to be here.
I wanted to hear actually what your morning entailed, because I think having a business and small children and potentially working from home, which it looks like you might be today, is not as smooth sailing as, an example, Andrew woke up this morning and was gone before 6 and didn't have to deal with the child or their tantrum and was happily at work sipping on his coffee at his desk by 7. How did your morning?
Yeah. Well, working in the home office, it's difficult, especially at the moment. We've got a 1-year-old or just about 1-year-old and a 2.5-year-old. And the 2.5-year-old actually is regressing on her sleep a little bit, I think. And so there's this balance of who's doing which child overnight. So then it sort of depends which room I'm actually waking up in. Like I'm in the toddler's room a lot in the morning, and then so I get the first sort of hello and take her out and try to get her ready for the day. And then of course the tantrums start pretty quickly. Like this morning they started fighting about a toy pretty quick, I think. And so yeah, I've got the chaos straight away. The chaos is like I'm trying to help out as much as I can, but I've got to get out the door as well in a way. So when I say out the door, we've actually blocked off the main entrance to where our home office is, and it's got an external door. And so this morning I get dressed and I get ready and then I say goodbye to the kids. I walk outside and then back around into the home office, which is just on the other side of the house. Yeah. So the toddler thinks I'm going to work.
Do they know that you're on the property? No.
They used to. Like we keep shuffling the rooms around a little bit. And so she knows there's an office here, and she used to come and just sort of very slowly, like she knew I'd be working, so she'd very slowly slide the door open and like pop her head under the little curtain that we put up and try to sneak in. And it's all, it's a pretty welcome distraction, but it is a distraction. It gets tough. And like we do have offices that we go to, but when the kids both aren't sleeping, it's sort of hard for me to get up early and get out the door, because it means leaving Kate with both of them, and it's just at the moment it's just so hard.
Yeah, they're really tough ages. At least you can pretend like you're going to work. So Ben's latest thing, so Ben's 5, and his latest thing is, oh mum, you just staying at home again today, just you got the day off again today, and like looks at the TV like insinuating that I'm just going to be sitting here watching the Smurfs. And he's like, I've paused my show, like, don't keep watching it. Yeah. And I'm like, mate, this laptop is all I need. I don't need to go to an office. And like, you're a COVID baby, you should know better. Like you witnessed this all at home. Like you were breastfeeding on the Zooms.
Yeah.
You should know better.
Yeah, you should understand, Benny. But it's I'm finding as well, like, trying to get the balance is just so difficult, with the kids and the work. And Billy, our older one, the toddler, she has these moments where she's like, "No, Dad, no work today, no work," and she tries to sort of drag you away, and it's a little heartbreaking sometimes when you have to say, "Well, no, I do have to go," and but you don't want to, but yeah.
And it's the balance of like, I'll pick them up half an hour later or an hour later, but then when I do have them, I'll make an effort of not having my phone on me, and like being more present. Or like I pick them up earlier and then I'm still kind of dealing with emails and stuff on the phone with them.
Yeah, and then the same sort of thing. Like I'm on my phone, like I've got to be fairly responsive, right? And there are timelines we have to obviously manage. And Billy was at Nana's house the other day, and she was pretending to be me, and so she had one of the phones and was like walking around just on the phone, like pretending to be Dad. And so it's just, I feel bad. Like that's the picture, that's the image that she has of me, is this guy who just walks around on the phone all the time. So
Productive.
yeah,
Could be a much worse image.
well, yeah, I guess I suppose so. Yeah.
Oh, yeah, that's good. My morning of a small business owner was I had to hustle the kids out the door this morning to get to work, which like is always quite good for Ben to see that I'm hustling out the door. Occasionally, he hates me hustling them out the door because it never, they're pretty lucky that they just get to roll out of bed, have breakfast, and I get them to school a bit later. And then I had to go and pick up carpets from Caringbah, meet an air tasker, get them into our kitchen at Matraville, and lay them myself. Right? They're like 100 kilos. Do you know how heavy carpets are? I didn't.
Yeah.
And the air tasker before I realised. And then I had to lock up and hustle back here to record this. And I was meant to be at Daisy's, but little Maxie, she was at the doctor's with him this morning, and he's got tonsillitis. He's sick again, the poor little poppet. So,
oh no, tonsillitis as well.
I know, and an ear infection.
Yeah, they seem to get a lot of ear infections. That's a constant one in our house. And little Frankie's getting her grommets put in to try to stop that because she just kept getting so many, and they're just always blocked, I think.
I thought I might need that for Ben at one point. It usually happens when they start swimming, right? But anyway. Okay, welcome to the podcast. We have you on here because you've written an article. We're an expert of the week, which I've just told everyone about, and you've written an article for us about preparing financially for children, which I actually don't believe that you can do, but you can be across what is needed, the things to look out for, the things to not be naive about, the things to be aware of, to go into having children kind of, when you have that baby, it's already so stressful and you don't really understand what the pressure that you're about to be under as far as your relationship and sleep deprivation and managing family and managing friends, like everything changes, right? Your mental health, your partner's mental health. So to add finances onto that is quite difficult. And it's a strain that, it may not be able to be completely avoided, but it can be managed and the stress of it reduced, right?
Yeah. That's. I mean, managed is probably the best way to put it. You're going to have so many stresses that are coming up, and the sleep deprivation makes basically everything stressful, even the smallest things, as you know. And so, if you can just take at least a little bit of the pressure off, then that's all we can sort of try to do.
So it's hard because a lot of people go into having a baby, they're trying to conceive for a while, and then some people are just surprised, and then other people, can try for a week and it happens. So something that I didn't know about when you have a baby is that the banks don't love it. They don't love giving you money if you know that you're pregnant. So they count you as being pregnant as having a dependent or an incoming dependent. And that can reduce your borrowing power. And then they also think, well, you're about to have a baby, your income's about to reduce. So there's a couple of factors to consider there. So tell me, if I knew that I was trying for a baby and I was going to fall pregnant in 6 months and I wanted to I knew that we were going to have to upsize eventually, the one better in Newtown isn't going to cut it anymore. I might have to move out to the suburbs, get a couple of bedrooms and a backyard. What would the ideal client be doing? When would they engage you? What information would they have available for you to make that sort of a decision, and how'd the timeline look?
Yeah. It's a difficult timeline because, like you said, how long does that actually take when you're planning a family? It could be a very short process, could be a very long process. If you just go straight into a lender and say, hey, look, this is what I want to do, and I'm planning on having, a baby and whatever the timeline is going to be, they want to understand what the future projection of income is going to be. They want to build in potentially the dependents. Whereas if you don't yet know 100% that you are going to have a baby and you go to borrow, whether or not you have to start building that in, you don't necessarily start at that point. So if we can sort of forward plan it just a little bit and make sure that we're doing things like preparing for when our income does go down, maybe we are building up some extra savings buffers in case of that as well, then we don't necessarily have to go to the bank and say, hey, I'm about to have a baby, because you don't know. You just don't know how long it's going to take. So your borrowing capacity remains high at that point if we can just forward plan it a little bit. The key to that, though, is don't stretch your borrowing capacity as far as you can and then all of a sudden cut your income in half. That's where you're going to get into trouble. And especially if things like the last 18 months happen where the interest rates have just sort of spiked, you'll find anyone who did that is doubling the pressure that they're now under. So, yeah, well,
that's right. So go in, knowledge is power for you, but tell the bank only what they need to hear at the time. Any sort of duty of disclosure is, like it's the same with insurance, right? Like you might have expectations of what your next 6 to 12 months look like, but it's not your actual situation right now. So tell them what they need to hear, but don't be stupid, because you do have to pay for the amount that you're borrowing, right?
You will, yeah. And so, again, we can build certain things in place. Like, again, safety cash buffers are always going to be good. We might put some fixed interest in there. And, at the moment, let's say fixed interest rates might be slightly higher than what a variable rate interest loan would be. But the safety that you get from having the set repayment for the next, could be 3, 4, 5 years, it just means there's, again, one more thing you don't have to think about. I know what the payment's going to be. It's not going to change. Let's deal with the 1,000 other things that are about to happen in life. So it's really about trying to plan that forward a little bit and see what we have to work with there.
Yeah, cool. I think sometimes people expect that when they have the baby, things get really expensive, which they do down the track, right? But I reckon there's a bit of a build up. Like when you're pregnant, things get expensive because you feel the need to buy all the stuff. Like baby showers can help a little bit with that, but that's kind of when your expenses are high, when you're overspending, you're a bit overexcited. And when the baby comes, like they don't move, they don't need much room. Like you're kind of good for a while. Your income might reduce, but you're also not going out to your, long lunches all the time anymore and out on the weekends. So although expenses can change, they go up and they go down, right? And then it's forward planning for things like when you're going to start childcare. And so when someone comes to see you as a financial planner or mortgage broker, they need to understand where they work, what their mat leave looks like, whether them as a couple are entitled to government payments, when they're going to return to work, and then when they do return to work, will it be full-time, part-time, what that income will look like, and then the cost of childcare to cover that, right?
Yeah.
Did that give you like a accurate snapshot of?
Yeah, that's it. It's about trying to build a realistic forecasted budget, because again, we know budgets are going to change, cost of living is going to change, but like you said, expenses that you might have before having kids they're definitely going to come down in certain aspects and then they go up in other aspects. So just get as many of the things that we can together on those numbers, get as much clarity as we can. And then what we like to do is more so, rather than say this is what your borrowing capacity is, we say, well, if you look at that budget, then you'd be comfortable for a repayment range of X to Y. And so what is a loan that has a payment of X to Y? And then we work backwards from there. And so that's one of the things where, rather than just taking the maximum the lender will give you, you're going to tailor it to a set number. And so we recently did a loan for actually a financial advisor themselves, and they'd already done that in quite a good amount of detail. And so this is where we work with a lot of financial planners and we get a lot of ideas from them as well. So they built in probably a couple of years worth of expenses and what they thought it was going to be. They'd worked out their cash flow. They'd said, yep, a repayment figure between these two numbers, we're not going to be in financial stress. And so we can very easily just work backwards off that and tailor it around that. But the more detail we can get on that, probably the better.
And then what are you seeing out there at the moment? Are you seeing a lot of people coming into borrow? Are you seeing a lot of people coming in, starting families, looking to buy, or have people eased off a bit? Or
Yeah, it's a tricky one at the moment, borrowing capacity wise, even without kids. So we've got a fair few people at the moment, and our book does change. It's a very big book of clients, so they're very different clients week to week. But at the moment, we've got a few clients they've already got a house and they're looking to get a bit more space. So they're sort of in that little trap. And it can be very difficult to move from one to the next. And that's why it's always good to try to do this stuff up front and plan for it ahead when we have the income. Because selling a house, you used to be in a position if interest rates were a lot less and when house prices weren't so high like they are now, it wasn't out of the question to have a small little unit where you used to live and then look to buy a home later and keep the unit. That was a very possible situation. It's very, very difficult now to hold on to both. The debt is just too much. It's getting too expensive, but it's difficult to sell and then move to another house. So a lot of our families looking to upgrade, they're just getting very stuck in that particular situation. You've got to sell first now, get as much cash as you can to then try to buy something else. There's also a lot of movement. I mean, since COVID, there's been a lot of movement around moving further out of Sydney, trying to find places that are just more reasonably priced, where you can get more space. And it's essentially what I did as well myself. Like I was probably going down what you would call the rent vesting. A lot of people would call that. It's more rent developing. We like to build houses, but rent vesting, you've probably heard that term. And when the kids start happening and the family planning starts happening, you just say, well, look, I need more space than the little unit that I've been living in. And Sydney is very difficult to find that space. So we see people moving out, migrating outwards, as long as their employment and their work situation obviously can handle that. Then yeah, there are still a lot of first home buyers that we're seeing out there, but it is typically that before family stage, because that's when the incomes are strong enough to be in Sydney and buy a bigger place. And then they'll sort of plan their family around what those expenses are going to be in the future instead.
yeah, it's sad. We spoke about it last week. Actually, it's not sad. It's great. Like people are moving into different areas that and forming their little communities there, and it's a really nice, relaxed. I think it's like to get out of the city is, people don't realize how relaxing and how good for your soul it can be to kind of be out of the stress and the buzz and the pressure and to just they don't realize. But we were talking about last week how it can be quite sad because you can have, there's someone like me who has a network of family around and like quite a strong village who are pretty hands-on and help me a lot. And a lot of people that do have that are being priced out of those areas that they grew up in and having to move further afield, and which is fine because they're getting the space and the property, but they're also losing that village, the natural village that they had. They can't make them move with them. So
Yeah.
you can try and get a petition signed to get everyone to move.
Yeah.
Like it does. I think it is good in some respects that people have options to head into state or further up or down the coast. But
yeah, I mean,
it can
even
be sad.
rent vesting in general is gaining more popularity because of the difficulties in Sydney. Like if it's not feasible.
Can you explain rent vesting?
Yeah, sorry. So when I say rent vesting, that's where you rent somewhere that you want to live and then you buy somewhere else as an investment. So it's a way of just being in the property market, but still being able to live where you want to live. And the way prices are going, it's just more and more people are going down that path, first home buyers especially, because like you said, it is difficult to move away from your support network. And, we moved out of Sydney, but I was lucky that it actually got closer to my parents and Filipino mum, that she's basically, like she would almost pay us to do childcare for us, you know what I mean? So we're so lucky in that respect. And and my sister, for example, she's got young kids and they bought a place that has a granny flat, and so mum and dad would come and stay in the granny flat, and they'd help out with the childcare and things that way. But if you don't have the ability to buy that type of property in Sydney, then more people are saying, well, maybe we just rent where we want to live because it's close to our support networks, it's close to all the different things that we need. But rather than be out of the market completely, we might buy somewhere else and just put our money to work at least that way.
Yeah. What do you see as when people are looking to have, so two incomes coming in everyone's preparing to have a baby, 2 incomes still coming in. What do you, and I know this changes for every couple, but what's your, you must have like a multiplier or of a something that comes to mind as far as a safety buffer of savings sitting in the bank?
Yeah. We try to aim for a minimum of 6 months worth of your expenses. And so that could include the mortgage or not the mortgage. And again, we understand that that's probably not going to happen straight away. Like if you've just bought a place, it's likely you're going to have to use a lot of that cash. It's just a target though. We want to hit that target eventually, or at least, put a regular savings plan in place to hit that target. But 6 months seems to be the sort of ideal number. Anything more than that, you can again start to look at, well, maybe you're going to invest it somewhere, put it to work. If you do have a property at the moment, then offset accounts are always a good way to put that to work. They're a good way to store money. If you want to do things like if you're using offset accounts, I mean, they can also be good for things like if you want to build up savings for one of your kids, if you want to start them on a savings plan early, you can use it an offset account to do that, and it'll save interest on the home loan while you're doing it.
Yeah,
bit of an
and
added
that.
benefit. Yeah, and so like some lenders, the offset accounts help with budgeting as well. Like some lenders will give you multiple offset accounts. So you might say, I'll have one for my emergency buffer money, and I'll have my 6 months in there. I'm going to have my other one for my sort of daily spending, and then I might have another one for my holidays. And the holiday gets a contribution every week or month, and then when it builds up to a certain amount, off we go. And as long as my safety buffer savings are there and whatever else I've got, then you don't feel so guilty about spending the holiday money. That's what it was there for. But it's just an efficient way to sort of manage your money going forward and save interest on the home loan the whole time. I mean, that's the main game. They give you a 30-year loan term, but we want to pay that down as quick as we can, realistically. And so, offset.
Actually, I heard a strategy this week on people after they've bought a house and they're planning to have children, and the cash reserves go a bit low. And this is something I think that needs to be repeated time and time again. This is a short period of life, right? 2 to 3 years after each kid is born, there'll be a dip in income, and then it should lift up again, depending on whether you return to full-time work or part-time work. Hopefully the other partner's at that point in their career where they're slowly increasing. And so, like it's not doom and gloom. I think it's pretty easy to get stuck in doom and gloom during these sorts of chats or these periods of life, because you're like, oh my goodness, we've now got this mortgage, we've now got the income's dropped, we've got these kids that I haven't slept. Like, it is a short period, right? And you do come out of it, and as long as you've got like a decent strategy in place, then you can work through that. But I did hear an interesting strategy the other day that to get some cash reserves in case they needed it, they took equity out of the mortgage, essentially making their loan higher, right?
Yeah.
And then therefore their loan repayment increases, but then you can push it back out to 30 years to potentially bring the loan. Is that something that people are doing these days?
Yeah, it does happen in certain situations, and you can time that as well. So you can actually do that upfront by, let's say you're buying a property and you've got your deposit, you can actually just hold back your cash and borrow more at that point. That's probably the easier way to do it if it fits your timeline. But yeah, definitely at the moment, we're seeing people who might be taking some money out to do, you might call it some home renovations or whatnot, but then that's just a big chunk of cash that's then sat in an offset account. Yes, you then pay your loan repayments on it, but technically you're not paying interest. You're just paying a loan repayment because the same amount of cash that you just borrowed is sitting in the offset against that cash. So just to recap on how an offset account works, if you have $1 million loan and you have $100,000 sitting in an offset account, the bank will assume the $100,000 in the offset savings account is paid off the loan and only charge you interest on the difference. So in that scenario being $900K. So let's say now you've topped up your loan, you've increased it by 50 grand because you want some buffer money. You've got a 50 grand loan there and you've got 50 grand in the offset against it. You're not paying any interest on that. You have to make the loan repayments, but it can be a very good way to get that buffer money in place. We're working with a client who was planning on taking some time off, for example. And so we actually built in about 2 years worth of loan repayments in a buffer account for when they got the loan, and we did that by holding back some of their deposit, which again, it's not always the luxury that everybody has straight away. There are different ways to do it, but it just meant we took that pressure off for that 2 years. And so, yeah, there's definitely some ways around that. The extending of the loan term out to 30 years, we do see that happen. It's not something that we want to jump into straight away because it does make the repayment lower, but it extends your debt out for 30 years. So if we're doing it for a specific purpose to get through a short period of pain, let's say, and then we step it back up to try to pay it off again faster, then that's fine. But if you're just doing it to sort of lessen the repayment and then you're not going to think about it anymore, then you're kind of just kicking the can down the road a little bit. It's the same with things like, it's a little short term for more interest over a long term. And I see that as being the same with debt consolidation. So if you had a car loan and you're thinking, hey, let's lessen the repayment per month by putting it into the home loan, that can be good if the plan is to focus on reducing the monthly repayment. We need to get through some short-term pain. But you just got to remember what you're doing is extending a debt out for for many more years. And that's where you're actually going to end up paying a lot more interest. So we just need to make sure we do it at the right time.
Hard to not think to be richer and wiser down the track. When I make my millions, it will be my issue.
Yeah, that's right. If you're just sort of, you could have like a 5-year plan and you plan to win the lotto in that 50th year and pay it off, and that's fine.
That's the plan.
Well, Bitcoin will spike in 2026, so we'll pay it off. Fine, don't worry about it. You can, as long as it's a plan, then that's fine. Yeah, that same planning process can work with with changing your repayments from principal and interest to interest only. And this is a more risky one again, because you're only paying interest now. You're not paying the principal down, and lenders don't like it as much because of that. They see the risk in it. But let's say you're at not the sort of new kids era, you're sort of towards the end of the kids era, but you might have some pretty high or pretty large school fees. Maybe they're at a private school, let's just say, but you've only got 2-3 years left in that. Potentially a lender would say, well, look, we'll give you 3 years worth of only paying the interest off the loan, not the principal, and that'll reduce your repayment by 30%, let's say, just so you can get through this period, knowing that in 3 years' time your cash flow position will get significantly stronger. So again, it's more about what is the longer term plan. As long as we have that plan in place, then there's a couple of different levers we can use to help through those painful periods.
I think this just really speaks to the importance of having a decent relationship with your mortgage broker and financial advice, because we're lucky that my dad was a financial planner, so I've always had that kind of financial advisor chat around me, and I've got a background in life insurance. But you're friends with you are the whole bowl mortgage broker. You went to school with Jerome and Andrew, and you've written both of our loans for us. And probably you're a little too close to us in that I remember every Saturday, Andrew would be on the phone to you, sometimes during the open, walking around the house. Like, you probably did not care what we were looking at.
If you remember, actually, I went to bid on one of a house for you as well. I think I don't know where you guys were, but I was in there. I was ready to go with my bid, and it was like the first bid just blew our number out of the water, and I was like, I didn't even get to do anything.
Yeah, you're definitely a trusted advisor for us during the process, and I know that we probably abused that a little because we are quite close to you. But if you see you've worked with Andrew, I think he first bought in Newtown like 8 years or 7 years or whatever it was.
Yeah.
You've been through the whole journey, so you can understand when people need a mortgage broker and then they get referred by whatever the agent, whatever it is. And it's just it's a transactional relationship compared to when you do build a relationship with a mortgage broker and you involve them in the planning from when you're even considering buying a house or selling the first time or whatever it is. All of these different solutions and levers that you have available to you to try and optimize their situation and help them with the stress of a mortgage and having kids. It's obviously so valuable at that time. So
and I think there's two. I mean, you sort of touched on it. Then there's two different types of mortgage brokers for the most part, where there are some brokers out there who are very transactable. So they just want to write the loan and then that's sort of it, and they'll get paid a commission and whatever it is. Our business model is very different, and that's probably why as well. Our company is, over 20 years old. It's because I spend a lot of my time more so having conversations like this, talking about strategy and things. And we've optimized more so the back end so that I don't do all of the sort of paperwork and the time consuming stuff. We've got a team around us that'll do all of that so that I can focus on doing strategy talks and forward planning stuff. I mean, I've had a bunch of conversations already this week where we're talking to clients who they're not going to be ready to buy anything for sort of 9 months, 12 months. Some of them are in different countries still, but we're already working on the planning. We'll set those plans in place. We'll keep checking them. We'll come back to it in 6 months, 12 months, whenever it is. And that's the sort of bigger piece that we like to do. It's the longer term strategy and building the relationships that way.
Yeah, I love it. It's so good.
This is just a quick ad break to tell you about our new Sydney Mothers Group that's launching on the 14th of August, and we're super excited. We've designed a 10-week program where we can come together each week to bond, learn, eat, and play. Across the 10 weeks, we will hear from different experts on topics such as baby care, feeding, sleeping, mental health, movement, starting solids, and more. Places are quite limited, so if you want to buy a ticket, head over to our website or on our Instagram. You can click the link in our bio and find all the information there. Hope to see you soon.
I did want to touch on with you, because it's a passion of mine, is the importance of life insurance. So I come from a life insurance background in the sense that Dad was a financial planner and he did a lot of life insurance for his clients. And I think my experience of that as a kid was memories of Dad being either quite devastated because something had happened to a client and he hadn't taken the advice or implemented the life insurance or taken the level of cover or whatever it was, and seeing the impacts of that on that client and their family. And then seeing the other end of that spectrum, which was Dad coming home being like, wow, I've just delivered this amazing check to a family who have just, whether it was a TPD or a trauma claim or a life insurance claim, and he's hand delivered this check that's going to, mean that this family can grieve and take the time that they need to get over whatever the big life event that's just occurred, and just taking the stress out of that. And, to see both ends of that as a kid is pretty amazing. And then I got into life insurance. So I worked for a life insurer, and, I truly did understand the value of life insurance when I worked for them, and was pretty passionate about getting up. We sold products to an advisors. I used to speak to your dad about our life insurance policies, but it was still it wasn't just a sales job for me, because I could see, the importance of the policies that we were selling and to who we were selling them to. We were selling them to mums and dads. We were selling them to self-employed people who needed to have this cover in place because it was so important. So obviously a lot of people, and still to this day, I'm having conversations all the time with my friends who have got young children, or people, that I come across in business who are running businesses who have older children, and they're like, yeah, I've got a bit of cover in my super.
Yeah.
Just the default. And I'm like, do you know what do you know how much it is? No idea. And I remember when I met Andrew, you take for granted your knowledge. I get that. But when I met Andrew, he was the same. He was buying Newtown and he said, yeah, I've got some cover in my super. And it was like $100,000, right? And he was taking out a huge mortgage to buy this house. And what would happen if something happened to him? It would become my issue. And there's just not enough information out there. And then especially when at a time like this, when there are money pressures and the cost of living, it gets pushed to the bottom, there are things that get pushed to the bottom of the list, and life insurance is for sure one of them. But again, there are other ways to pay for it, such as through your superannuation obviously you see it because you have people coming to you who are about to have children, who are buying houses. And so you have to raise with them life insurance, right? And the importance of it, or the necessity for it.
Yeah. It can't, like you said, it can't really be understated. And I mean, you'd know about the underinsurance problem that we have in the country. Really, it's crazy. I mean, even to just sit down for 5 minutes and think, what would happen in that situation? What would we realistically do? And then you'll probably realize, well, yeah, we've got some cash savings, but it's not really going to get us through. We're going to have this big new mortgage and big new debt. Yeah, every client that we work with, we talk about it, we suggest it. Not everybody wants to do it. Like you said, at a time when, cost of living pressures are pretty high, it's not always the thing that people want to talk about. Yes, you can have default cover, like you said, in your super, but probably you don't know what it is. You don't know what the conditions are. You don't know anything about it. So yeah, it just can't be understated, the importance of getting the right insurance, the right advice around that in place, especially when we're looking at getting quite a big debt in place. You need to protect your family more than anything else at this point.
That's right. And like, it can feel expensive, but it's actually not that expensive if you look at it. You're paying an accountant to do this, you're paying a lawyer to do this. The life insurance fees for life insurance actually aren't that expensive. And it's just so important. And I think if there's one key takeaway from people listening to this, it's make sure you've got your budget in place. Don't put your head in the sand. Make sure you've got a long term. If you're looking to buy a property in the future, start that strategy now. Find a trusted advisor and a mortgage broker and start that chat now. And it's a bit like, we speak to doulas, we speak to other health experts. It's a bit like that. You don't need to, you might get referred to someone. You don't have to date the first person you meet, like if you don't mesh, if they're not like, if your values don't align, if they're not really, if they're giving you a bit of attitude, like just go and meet someone else. Like, you don't have to marry the first guy or girl you meet.
That's a really big one that we push as well, because we do work with planners and accountants, and to a much lesser extent buyer's agent. That's a sort of a different kettle of fish, I think. But one of the first things I say is, look, this is someone that we work with, but if it's not, it's got to be the right fit. So if it's not, have a chat to them, see how it goes. If it's not, we've got some other people you can still work with, and we can refer you on to them. But I'm huge on that fit, the right person for the right person. Yeah.
It's such a vulnerable time of your life, and you have to overshare so much information with these people. It's more information than you'll tell your family, potentially your partner. Like, as far as the financials that involved in your family situation for a mortgage, but life insurance, they've got your full health history. Sometimes, if you don't have to disclose it to them, you can disclose it directly to the life insurer. But you're having really intimate, close conversations with these guys, and you want it to be honest. So you can definitely find someone that you mesh well with, so you can be completely vulnerable, so that you are as protected as you can be. So definitely suss out your life insurance situation. Definitely make sure you're on top of your budget. Definitely make sure you've got a mortgage broker or a handful of mortgage brokers in mind. Family and friends are a good place to start, aren't they, as far as referrals go for that stuff?
It's often the way. Like, if you Google a broker, for example, there are probably some big companies and things out there that might have a lot of Google reviews, because they do push pretty hard for it. But
They pay on Fiverr for them.
Paid on Fiverr, yeah. You can buy anything these days. But yeah, you like, I find the bigger ones are, by nature, they sort of have to be those transactable brokers. You do want a little bit more of a personalized service, I think. So yeah, referrals are always good. Referrals, I should say, from family and friends are always good, because they've been through the process. They're comfortable with the experience that they received. And yeah, forward to your sort of list of action steps too. Like, forward planning is always the big one. Let's just look at what the numbers look like. I can run and model all these different scenarios out there, and we just keep doing it. Like, we'll work with some clients to just run 10, 20 different scenarios. We'll set out charts of what it might look like, what the repayments would change to be. What if we hold back cash, do this, do that? I even put some of them up on, I put a few things up on our Instagram page, for example, where they're just examples of what it would look like if we add a kid here, or if we take away an income there, or if we wanted to buy for XYZ. Let's run through the numbers, just have an example and have an idea of what that looks like. And then we just slowly start planning around it.
Yeah, I also think a big misconception is thinking like, if you don't have a huge amount of savings, or you're feeling financially stressed as it is, that it's not the time to, you only seek out a mortgage broker or a financial planner when you're like flush with cash and you've got too much cash and you need them to tell you where to put all the cash. Like, it's just not the way. Like, people that seek this sort of advice are the people that are flush with cash later, because they've manage their cash from when it was a small amount to become that big amount. They help you work out your budget so that then you can put away your bit of savings every month. And it can start small, right? But money makes money. And I think that scares me when I see on some of the mum chats online and stuff, people just so stressed about money but too scared to seek advice because they think that's going to cost them more money. And, as soon as you start talking to experts, that's when, you can get the value out of that expert and
but
change your situation.
the budgeting especially, and then trying to find out what you could put away and how that feels to put that money away too. Like if it's going to impact your actual, lifestyle, you don't want to impact your lifestyle too much, but of course there are probably changes that you can make. But budgeting doesn't have to be the most complex, in-depth thing. If you're just starting out, or if you're not sure where to start even, I would even just sort of set a couple of buckets and just have a little bit of a test. Like I'm going to aim to spend only this much this week, this month, whatever it is. How did that feel? Did we go over it? Did we go under? Just play around with it. You don't have to go through every single cent. Eventually you might get better at it and you can go through the cents and the dollars and find out where it's all going. But I think the overcomplicating of that process is also what just stops people, because they might start a really complex looking budget and then just go, oh, it's too much. I don't want to keep doing this. I've got a million other things I've got to do. And then they stop completely. So keep it simple.
Yeah, cool. We are running out of time, but I just do very quickly want to, just while we're talking about the different buckets of experts that are important during this time, I did want to touch on wills and estate planning. Now, I know this isn't something that you necessarily do, but it does fall into that. This period of our lives is when this sort of stuff does become important. And I can put my hand up in saying that I am not that organized with this stuff because it feels high pressure, right? It feels like you're making big decisions and it's a lot of paperwork. My sister is really organized with this stuff. And I'm highly impressed at how organized she was. As soon as she had her baby, she was like, let's go. Can you come into the city? I need you to sign documents, etc.
Yeah.
And it is a time in your life it's just some of the paperwork that should be done during this time, right?
Yeah, it is important. You've got the life insurance and things that we talked about, but you've still got to think about the bigger picture as well. The estate planning, the longer term financial plan. And like you said, these are big conversations. But if you're going to go talk to an advisor and a planner to get some insurance work done as well, they can often we can build all of that in. But it is important. You've got to ask these questions, right? What does happen in the event of X or Y, or what's our longer term strategy? Especially if we're starting to look at, it depends on where your situation is, but some people, you're going to start to accumulate some pretty big assets. We might be starting to talk about investment properties, all that type of thing. It's very important that as you're accumulating, you're in that accumulation phase, that we are protecting what we've got. We're planning for what's going to happen in the future. And we're going to plan for what happens in these sort of unfortunate, perhaps, or just unexpected life events as well. So yeah, definitely a very important conversation to have. Don't shy away from that sort of thing.
Yeah, agreed. Is there any other big bits that we've not mentioned throughout this conversation as far as this stage of your life?
Well, I think we sort of touched on it, but I guess it'd be good just to emphasize a little bit as well, because it's something that we do see a little bit. If you are looking to borrow, or you do need to borrow for whatever the reason is, and you are either pregnant at the moment, or even if you're on mat leave already, a lot of people just assume that you can't borrow, or that it's just not going to work. The thing to remember is that, again, we're looking at the forward planning of it. So again, you did touch on it earlier. If you can get letters and documents from your employer to really clearly state what we're going to be returning to work and earning and how many days that's going to be, and we can get a picture of that, and we can prove that in the short term you've got some cash to hold us over, you might have some savings, that's all good, then your borrowing is based on a future state. So don't think that you're automatically ruled out of anything. It's just about getting clarity on what the picture is going forward. So it's never a bad time, basically, to have a chat to your broker and have a chat to us, and we can put in place, or we can look at what you're currently able to do and then put in place the plan from there. I think that's probably the key.
Yeah, cool. Or just everyone move in with your parents and stay there.
Yeah. Well, yeah, the daycare will be cheaper, that's for sure.
Don't start a business on that leave.
Oh,
Hot
yeah. Hot tip.
tips.
Yeah, you're gonna be stretched pretty thin as it is. I get my Filipino mum, she would love us to move in with them, I think, full time. It's a big
I'll move in with that.
Yeah, it's great. Oh, she loves it. I mean, again, I think there's a big culture difference. I think the Filipino nature back in the Philippines, and I mean, I was born here, but mum from the Philippines. You don't actually move out of home until you get married there. The families stay in these big houses, and everybody just helps everybody. And there's like,
Oh,
last time I was there, I remember being in one of the family houses, and I walked around the corner, and there was about 10 aunties just all like cooking and doing all these things. It's just like a constant sort of a thing,
a
and
dream.
the help you can get is just amazing. If you're in that situation and you can get that help, it makes a world of difference.
Yeah. Well, marry into it. If you haven't yet selected your partner,
Yeah, look for
find
some
a good
Filipinos.
Filipino boy. Okay, final question. What is happening with the interest rates? When are we saved? When are we saved?
Yeah, the big one for last. Yeah, look, this one is just day to day almost. This one's changing. I would be keeping a very close eye on the next couple of weeks. We want to see what happens in August. I think there is the risk at the moment, the way the data is looking, there is the bit of a risk that they may have to put the rate up in August. Not 100% sure if they're going to do that, though. Not everybody agrees with that one. I think they can't risk letting inflation get out of control. It's harder to reel it back in. If they overshoot with their rates, they can cut them back quickly. But if they don't and it gets away, I think that's a more difficult conversation to have. But August aside, with sort of all the different experts out there at the moment are sort of looking like early 2025, perhaps, is when we might see some cuts. Through 25, you may end up getting anywhere between 1%, maybe 1.5% down. It's not going to get down to that 2% unless we have some, international catastrophe, which is not out of the question, of course. But definitely don't plan on the 2% coming back. I think the maximum we might be able to get to is like 1.5% down from where we are now. That said, the way the banks do their discounting is also very different. Their appetite will change as things evolve. And so discounts off those variable rates can also be different. One of the big tips for anyone who has a mortgage at the moment, which is just so unknown, but a huge, easy tip, is literally just call your bank and tell them you've had a better offer from another bank. Just straight up tell them, like, you need a better interest rate. You've seen better interest rates out there. 9 times out of 10, they'll just give you a discount on the spot. And if you don't have the ability to
do for you? Is
Yeah,
that
well,
something?
it's often the starting point. So if for our existing clients, we can do that very quickly. With some lenders, we can if you're not a client, but a lot of lenders, if you're not one of our clients already, it's not as easy for us to do that. We don't necessarily have access. But we always suggest, like any new client with a loan already, we always suggest they do that first. And then we take that rate, whatever they were able to get, and then we will shop that around and show you what it looks like. Again, going back to the sort of volume-based brokers, like we're not a volume-based broker. We're trying to build these relationships. So a lot of the time, we'll get a new customer in. I'll tell them to get the rate checked, and I'll show them the difference between what else is out there. And even if theirs is a little bit more expensive, it doesn't always make sense to refinance a loan and chop up all of your existing bank accounts, the repayments you've already got set up. It's a big thing that you have to move everything across. I'd rather not put everybody through the hassle of it unless they're going to get a good benefit. And, you might say that's counterintuitive to our business because I don't get paid to do that, but that's the right thing to do. And
Yeah.
that's what we sort of are focused on. So if you just do it as step one, or come to us, and if it's with the right lender, we can do it for you for sure. But that's the number one tip I give to a lot of people, really. Just call the bank and ask.
About everything. Like, call your electricity company, call your private health cover.
Yeah. Oh,
And
electricity.
you ask them, usually you're on an old policy that they can upgrade, or you threaten to leave. Everyone's like, retention's king, right? They've got full teams ready for retention. So there's
Yeah.
always another offer that they'll send to you.
Yeah. My Kate is really good at that with the electricity and things. She'll get on the phone and hassle them, and it's amazing the speed at which you can change some of those providers over as well. So you might as well do it.
Yeah, I've got a hot tip about if the rate's going to go up again. So there's a good wine company called Unico Zelo.
Mm-hmm.
They're based in South Australia, and they've got a box of reds, 12 reds, that every time the interest rate goes up, they drop the price. So I think it's currently down to 100 or 120 for 12 reds, and it keeps going down because it keeps going up.
Yeah.
So
Hey, that's actually that's a good budgeting tip too. Actually, it's cutting the wine bill in half.
Who's not on here? I can spruik the wine companies.
Yeah. That's good. I'm going to go look that up, actually.
Yeah, they're good. They're really good. They're one of my favorites. All right, cool. Well, thank you for coming. Thank you for coming on and chatting to us. We do really appreciate it. And, although we have a lot of experts, as I mentioned, naturopaths and nutritionists, and, they provide a lot of value to support women and women's health during this stage of their lives. There are other things that are important during this stage of their lives, and your finances are one of them. And, learning how to understand a mortgage and budgeting, and it's really important. And it's really important for me that women get across this stuff as well, because even though if their income's lessening during this period or stopping completely, it doesn't mean that they're still in the decision making like they still got that power for decision making during this period, and they need to be across their family's budget and where to put the money and how to best set them up for their future. So you're bringing kids into the world, right? It's like a lot of responsibility to sort this shit out.
Yeah. Well, I mean, between Kate and I, we sort of divvy up the budgeting because, I've got a lot of things that I'm doing with the business, and I've got to do the cash flow for the business, which is a bit more complex. But so on the personal side, I actually do the high level buckets, and then she does in the middle of the bucket. So she does all the detailed numbers within that. And so if we go over one of our spending limits on something, then she's able to pinpoint what happened and we can talk about why that happened, and then do we need to adjust the buckets or not. But then at the high level, I'm just dealing with, I just work to make sure the buckets all fit and that we're good from a cash flow perspective. So you can divvy it up like that as well. Everybody gets a grip on what you're doing, and you can have those conversations. And I think that's a really good thing.
Really important, I think, for it to be everyone's responsibility. Like I think sometimes women during this period feel like they're not bringing in the income as much as they were, so that they just don't have their eyes on it. But it is up to everyone to make sure that everything's working. And I see too often these women on Facebook groups and stuff saying it's all gone to shit, and I don't know where any money is, and I don't know how to budget, and I don't know where to start. And so it's really up to you to be having these conversations with your partner from the get-go and to stay involved in this sort of stuff.
Yeah. No, absolutely. And I mean, divide and conquer as well. Split the workload. You just got to help each other through this.
No one's sleeping, guys. So everyone pick up a bit of the slack.
Yeah, that's it. I remember during those first, the early days, the fog with the newborns, and especially our first one, because you're pretty new to it at the time. Whenever the baby was down, and if Kate was having a nap, trying to catch up on sleep, in my brain, I was like, I literally need to do anything possible here. Like, even if it's just picking up a toy or something like that, just do something. I felt like kind of useless outside of my job, because
it's so true. It's like I've got maybe half an hour, and then you've got like 40 things that you could do, and then you just end up sitting there scrolling, and then suddenly the baby's awake, and then you're like, oh my gosh, I didn't do one of them.
And this is maybe a funny one that just only happens in my brain, but you might have heard of there's a really terrible TV show called Below Deck. It's like a reality TV show, and there's these people that work on Below Deck, right? And whenever I'm tired, I'm like, I can't handle cleaning up right now. I go back to this show and I think, well, hang on, there are these people on Below Deck and they get zero sleep and they're always cleaning and they're always doing this stuff. If they can do it, I can do it, and I get a little pep talk on, and then I'm cleaning
up.
Your
reality check is Below Deck stuff.
Reality check.
She hadn't got to sleep at 2:00 last night because the primary was up doing tequila shots still then, and she still got up at 5 to make breakfast.
Exactly, and they're cleaning up, so if they can do it, I can do it. That's right.
They also get huge tips, right?
That's the real tip, yeah. I'm glad you knew the show, actually, so you understood what I was talking about. Thought it might be a bit niche.
Awesome. Right. Well, obviously I'm about to share the article today. It's Tuesday. This will come out on Thursday. The below at the end of the article at the end of
Right
the
back, see?
article, there are some really good links I saw to some budgeting calculators and some like borrowing calculators so that people can kind of play around.
Mhm.
And then obviously I'll link your details. I'll link your Instagram and your website so that people know where to find you. I think your Instagram is really good just for like quick, fun facts about this stuff.
Yeah.
And they can contact you through the website, right?
Yeah, definitely. It's all details on the website or even on the Instagram. I mean, with the Instagram stuff, if anybody wants something specific, some little quick info, just shout out. Like I love to give anything that anyone's asking for. I like to model it out, and it's often even for me to model out these different scenarios is interesting because you never realize the differences. Like we did one the other day that was how does your borrowing capacity change with kids coming up, right? And we assumed the income stayed the same just to make it a bit easier. The first child reduces your income or your borrowing capacity by about 50 grand. And then every child after that, it reduced it by like a funny number, like 38,000. It wasn't a linear thing. And like, unless you
Wow.
set those numbers out, you never really still to think about it. And maybe I'm a bit of a numbers guy, but I found that really interesting.
Yeah, it's really interesting. I did see that one. Yeah, no, it's great. I might think of some fun ones to throw at you.
Yeah, please do.
All right, cool. Well, catch you later.
Cool. See you then. Thanks for having me.